Welcome everyone to the second week of Digital X ADB. This is the Asian Development Bank signature event that brings together technology and people. I'm Carolyn Cabrera from the Digital Innovation Sandbox program. Today through the end of the month, we aim to inspire and challenge you with Digital X ADB's main sessions on digital infrastructure, work, economy, and government. There's also a Tech Expo, which features the latest in technology with partner vendors and startups, and a digital experience gallery, which showcases ADB's best technologies. We really hope and highly encourage you all to check them out. Today's panel promises to be quite exciting and not the typical talk shop, as we hear from alternative voices on technology trends for development. A reminder to the audience that you may submit questions through the Q&A button, and the panel will address these as time permits. I'm delighted to now introduce our keynote speaker and moderator for today, Mr. Ahmed Saeed, Vice President for East Asia, Southeast Asia, and the Pacific, as well as Chair of the ADB Digital Innovation Sandbox Program. Over to you, VP.
Thank you so much, and it's good to be with everyone again. I think it's been an amazing week. We kicked off Digital X ADB last Monday, and I thought it was a great conversation. Very grateful to President Asakawa and all of the industry leaders and thought leaders that we heard from last Monday and through until today. A week later, we thought we had a conversation in the kickoff session on digital technology trends, but we thought that a week later it might be interesting to revisit the same topic, but to do so in a bit more of an outside-in perspective with innovators who are pushing the digital boundaries and working on disruptive innovations that may unlock future mega trends. When I look back to 2019 and from there to where we are today, it's so clear that the world has changed dramatically in the last 2 years. For many decades, we had been following Moore's Law, and recently it seems that the pace of change in digital technology and in society more generally is outpacing even that dynamic. Artificial intelligence, DeFi, decentralized finance, digital payments, and other digital technologies are rapidly and exponentially progressing through society, unleashing new industries and new business models at a pace even faster than we have ever seen before. These new technologies are giving rise to new growth opportunities, and they're unleashing the potential of individuals and commercial concerns in all sizes, in all countries, in all geographies, and across all industries. According to a recent report by the ADB, a 20% increase in the global digital sector would allow Asia and the Pacific to reap an economic dividend of over $8.6 trillion from 2021 to 2025. That's about 65 million new jobs created yearly from increased use of digital technologies, and a $1 trillion annual increase in regional trade. Well, why is this happening? Different forces are at work, giving rise to this digital explosion. First, the pandemic has been an enormous accelerant, an enormous move into the virtual and digital world for all of us. Second, we've seen convergence, and as we all know, really powerful transformations are unleashed when we see multiple technologies and disciplines converge into new possibilities, and Web 3.0 is just an example of that. Third, it's always useful to follow the money, but the money is usually following something else. And this move online and the emergence of these inflection points has led to a tremendous increase in the amount of venture capital and private equity, and in fact, public market capital that's moving into technology-related businesses. And then fourth, we know that digital technologies and innovation more generally will be ground zero in the fight to adapt to and to mitigate the looming crisis of climate change. Now, one of the reasons we're doing today's session is because, as important as mainstream thinking is, we've all learned that important ideas tend to come from unexpected places. And being careful and judicious in ensuring we have room in our dialogue for diverse and fresh perspectives is absolutely critical. It's the nature of large institutions, a large development bank like ours, the governments with whom we work, the large corporate concerns with whom we engage regularly, to almost institutionally be pivoted away from understanding ideas that originate in settings outside of our institutional context. But we know from recent history that to ignore such ideas and trends is to ignore some of the most important developments in today's world. And so it's in that spirit of embracing the new, that spirit of questioning how to achieve our objectives, that we're holding this dialogue today. And on the horizon, as we look forward, there appear to be more and more game-changing technologies that will affect our lives on a daily level. It we're already benefiting from and will only benefit more from innovations like algorithms and AI in our daily lives and our work, from decentralized finance, from global digital identities, and from new digital payment networks, to name just a few. Against this backdrop, I'd like to move now to the panel discussion, Alternative Voices on Technology Trends for Development. We're going to hear today from maverick innovators who are exploring new ideas and solutions on how to innovate on currencies, banking and payments, international trade, and property ownership, to name only a few of the areas that they're disrupting. This session presents the other side of the coin from the 11 October session, where we heard from more well-established digital players. I'm really looking forward to seeing how the conversation today is similar, and perhaps a bit more to seeing how it is different from those conversations last week. So it's my distinct pleasure now to introduce our distinguished panelists. Gustav Arentoft, co-founder of StableNode and contributor, MakerDAO Growth Core Unit. Lim Paik Wan, APAC Expansion Lead and Malaysia Country Director, WISE Asia Pacific. Ikapak Nirapathongporn, co-founder and CEO, Fraction Pause. Can Bin Ru, CEO, Southeast Asia, One Connect Financial Technology, and Carl Wagner, Chief Executive Officer of Contour. So thank you, each and every one of you, for taking time to be with us. Well, let's get started. And why don't we begin by asking our panelists to tell us just a little bit about themselves and about their organization, and maybe a little bit about their interests and their initiatives. Gustav, perhaps we could turn the floor to you first. Over to you.
Yes, thank you so much, Ahmed. Yeah, so my name is Gustav. I've been working for MakerDAO for about 3 years now. We're one of the front runners within this whole decentralized finance space, and represent a lot of the innovation that has happened there, and has been kind of setting the trend for a lot of the things that we have seen come out of the DeFi space. We operate a permissionless lending and borrowing protocol. We have our own decentralized stablecoin. So we have created a currency which is not issued by a central authority, but rather is being issued by a permissionless protocol. And kind of what we represent with DeFi is really the first time, I guess, where we're trying to create a new financial paradigm, where instead of being bound to the bias that the local situation you live in and operate in, where you're born, what that situation gives you, instead we're trying to create a completely unbiased global financial system. So, we have seen historically in the past how traditional finance has created opportunities for some and really limited the opportunities for others. And I think with decentralized finance, we're really trying to reshape the access that people has to finance stable assets, such as a stable coin, and just in general, the ability to have more room over their own financial situation.
Great. Well, thank you. And let's go next to our second panelist, Lim Paik Wan from WISE Asia Pacific. Could you tell us a little bit about yourself? Thank you. Very nice to have you. And if you could just tell us a little bit about yourself and your organization and your major initiatives, that'd be great.
Sure. No, thanks, Mr. Ahmad Said. I think before I introduce myself, first of all, I would like to thank DigitalX ADB for having me here. It's really excited for me. So as a quick introduction, my name is Paik Wan. I am Malaysian, based in Malaysia, also the country manager for WISE in Malaysia as well. I also oversee WISE's expansion efforts broadly in the Asia Pacific. What I do is basically and generally responsible for expanding our products into new markets in this region, which includes working with financial institutions and regulators. So briefly about WISE, we are founded in 2010 by two of our founders. We are essentially a global financial technology company that is building the best way to power cross-border payments for people, both individuals and businesses, be it sending, receiving, holding, or spending money globally. So that's just a quick introduction of myself and a bit of what we do. Thank you.
Thank you so much. And next, Ikapak from Fraction, please.
Thank you, Ahmed. So my name is Edgar Pak. I'm the co-founder and CEO of Fraction, an internet-scale, complete and full-service fractional ownership platform that we aim to change the game really for financial inclusion in the region and around the world by revolutionizing the access to investments and capital for everyone. Previously, I was the MD and partner of Lazard Investment Bank for 17 years. So I was an M&A banker. And this is actually where, throughout my times in the banking world, really realized the financial disconnect that we see everywhere in the world. Whilst you're in that world, in that really small percentage of people, you don't realize it. But then when you step out of it, you realize how many people are struggling, and the gap between the rich and the poor. Well, it's actually the gap between the rich and everyone else is getting wider and wider. And Fraction aims to change that, or to give opportunities and access to everyone else. At Fraction, we're not aiming at someone like me, actually, but actually aiming at someone that is just a normal guy, maybe a taxi driver or someone, to be able to actually have access and have the same equal opportunity as everyone else. Thank you.
Thank you very much. Next, can we go to Tan Binh Rue, CEO of OneConnect Financial Technology.
Hi, thank you. Morning, everyone. Yeah, and thanks to ADB for having me. So OneConnect, we are the fintech arm of Ping An Group, China Ping An Group, and Ping An is the largest insurer in China, as well as Ping An Bank. What we do is that we leverage on the technologies of Ping An to commercialize smaller solutions for Southeast Asia customers. Mainly the financial institutions, so we only service financial institutions. And because we have a lot of solutions in China, in Southeast Asia, we focus on digital banking solutions, all the way from the front-end solution to the back-end solution to the core system. We have our own virtual bank in Hong Kong that we built a tech stack end-to-end for the virtual banks. And therefore, leveraging on that tech stack is then now servicing a lot of customers in Southeast Asia. I think in Philippines, we're doing very well in Philippines. The other thing I would add is maybe kind of going forward, we're a little bit of between a fintech and an insurtech, because Ping An is known for their insurance solutions. And therefore, this year onwards, we are bringing in the insurance solutions just to represent Ping An's presence in Southeast Asia.
Thank you. And then Carl, back over to you from Contour, CEO.
Thank you, and thank you ADB for the invitation. Carl Wegner, CEO of Contour. I've been on this sort of digital journey for about 25 years from a banker standpoint, and about 12 years from a technology standpoint. I left banking once for this new technology called the internet in 2000, which seems sort of have stuck. And then I left banking again in 2016 for blockchain, and help set up R3, which is an enterprise blockchain system, which was the original genesis of Contour. Contour is a trade finance network to allow banks, corporates, and technology partners to interact, to communicate using distributed ledger technology, which allows our customers in 51 countries to be able to communicate, maintain their own databases for security and privacy and regulatory reasons, but still be able to communicate in a transparent manner. So we're been around for about a year and a half now, and are live with customers, and continue to grow and learn from the ecosystem. Thanks.
Great. Well, thanks everybody for that initial round. Thank you everybody for sharing a little bit about your backgrounds and your personal histories and your organizations. Why don't we go around, and I'd love to kind of hear from everyone about where they see some of the biggest upcoming disruptions. And I think extra credit will be given for unexpected responses. So So would love to hear from different people. And obviously, all of you are voting with your feet. I mean, you've all chosen to spend to focus your professional careers and energies on things that you view as disruptive. So I'm sure that there will be no discount for home bias for saying that what you're working on at your company is the most disruptive idea. In fact, that wouldn't come as a surprise at all, given that that's what you've chosen to spend your time on. But maybe we'll just go in reverse order, if folks wouldn't mind. And Carl, put you on the spot first. And I think what Contour is doing is really interesting, and you obviously you have the benefit of both institutional and non-institutional experience, as you said, and I think that always provides a good framework for thinking about these sorts of issues. So where do you see some of the highest impact innovations emerging in the next 5 years or even longer time horizon, if you want to take that?
Yeah, I mean, I'll sort of stick to blockchain, or actually more specific, distributed ledger technology. I think that the ability for institutions, individuals to be able to maintain their own data, their own databases, but communicate transparently, ubiquitously, sort of like, I mean, right now, in the old days, you had to send letters to individual people or faxes to individual people. Now on Instagram or whatever social platform, you can communicate with thousands of people, at one time. I think that distributed ledger technology is going to allow businesses to communicate as ubiquitously as people do on a personal level now. And I think that's going to help in terms of, you don't have reconciliation. If you're sharing a database, there's no reason to reconcile, did you pay me or did I receive the goods? Because you're looking at the same database. And I think that's going to make businesses so much more efficient, communication that much better. And I think that's going to be a huge benefit to again, not only big businesses, but small businesses as well, right? And inclusion, that everyone can get in on this, and be able to communicate and talk. I think the key thing is that it's allowed by the regulators in all the different countries, right? And so I think that's one of the biggest challenges. But I think distributed ledger technology, blockchain is one of the methods of consensus, but DLT is going to change how businesses talk.
Great, thank you. And maybe Tan Binh, if we can go to you next.
Sure. Sorry, I nearly forgot that it's reverse order.
Sorry, we can skip. We can give you time if you want.
No problem. No problem. I think the biggest impact, I probably wouldn't say is technologies that's coming up. Where I have seen the biggest impact is actually the adoption of cloud technology for financial institutions. I remember back into the days when I first started with Microsoft, that's maybe about 10 years ago, you hardly can get any solutions from the banks adopting cloud. And at that time, Microsoft cloud penetration started with 5% when I first joined them. And even for Windows, which is productivity tools, it's just not possible to get on cloud. But today, in many countries in Southeast Asia, and specifically in Philippines, we've done quite a number, whereby the end-to-end tech stack, that includes the core banking system, the loan origination system that never made it to fully cloud deployed, not all on the cloud. And we see opportunities to implement really end-to-end digitization and automation for financial institutions that we could conceptually be able to do prior, but never had the opportunity to do for a financial institution until now. A client of us in Philippines is very happy with the platform that we have done for them, because it allows the loan to be approved in 2 minutes. And this may sound very cliche in many ways, but then for financial institutions, there's a traditional bank, conventional bank that has been there with systems that are, I think, easily about 12 systems connecting from front all the way to back to be able to approve a loan within 2 minutes that's going through all levels of checks automatically. I would say only in recent years we are able to see that, and that's tremendous impact because a lot of these customers are new to bank. So back to, I think, I can't pronounce your name. I'm so sorry. The Thailand colleague mentioned about financial inclusion. that's where we see a lot of new to bank people who never have credit before really gaining access, not only to the digital banks, but also to the commercial banks. So that's on where the impact is. I think what's up and coming, definitely what Carl mentioned, in Singapore, I run the Blockchain Association of Singapore. And the association is very young, it's only 2 years old. But from the time that it set up, that we had hardly 10 members. I remember our goal initially when we set up for Blockchain Association, we had 10 members and we struggled to get to 30 initially, and now at this point in time, just 18 months from when we set up, today we have close to about 200 members and growing really, really fast. So I think this area is booming with innovations and a lot of experimental stuff. Not everything is going to be realistic or practical to land into an impact, but I definitely feel that it's gaining a lot of momentum. Hopefully to see something that's very practical in the near future, that's useful to the industry to be coming out of these experiments. Yeah.
Great, thank you very much for that. Next, Ekpat, can we go to you?
Thank you, Ahmed. Look, I don't think there's you should pinpoint a single technology or something that has the greatest impact. I think the key to having the greatest impact is, a new product or new technology that fixes the pain point, that actually, doing something that can't be done currently. And two, more importantly, it affects a whole mass of people rather than a small amount of people, right? And I'm going to jump into Carl's corner here. Fractioned. We are about distributed ledger technology too. Blockchain, we're using it, but we use our own private blockchain. So I'm not quite in Gustav's corner in terms of DeFi, because we are really the link between the traditional world and the new world. When I talk about a product that fixes a current pain point, I see people do tokenization of Apple shares, for example. And me coming from the traditional finance side, I ask myself, why do you need that? An Apple shares is $145, I think. Why do I need to buy a token of an Apple shares? Like, it's small enough. It's just, there's no need whatsoever, right? Or you go into other new technologies in terms of creating NFTs and the like, and it's $30 million, right? How many people can buy $30 million NFT? It's still coming back to the same issue of investment world being really for a very, very limited amount of people, right? Really small bracket of people. And this is where I think the biggest impact is going to come to DLTs, where we actually provide the products that is understood by most people. Talking about the stock market at the moment, I'm tired. I haven't lived in Thailand until COVID, actually. But let's talk about Thailand. I think there's close to 80 million people. There's 77 million people. I think there's less than 1 million of stock market participants, right? And that's just pathetic, really. And I'm actually not one of them. Even though, I've worked in, high finance for 20 years, I don't actually feel comfortable enough actually investing in the stock market, because I don't think the product is simple enough, or I'm actually able to actually analyze it well enough. So where I'm getting to is, DLTs, distributed ledger technology, and blockchain. What we're doing is we're turning products that people know well. We're turning to assets that people know well, and simplify it, or in fact, not trying to complicate it, and let everyone be able to actually participate. One thing that I'd like to leave is the issue of savings, right? When people talking about savings now, right? I think you get something like 1% deposit rate. That's less than inflation. You're losing money every day if you save. Okay, so that's why you need some other ways to actually make people to be able to actually look into the future and say, yep, I can actually survive in the future. And I think obviously I'm in Carl's corner. DLTs is what going to change it.
Thank you. Pei Kwan, over to you.
Thanks, Mr. Ahmed. I think for me, I'll share more from the cross-border payments perspective, where we've actually seen, some major developments on this front. What we've seen is that fintechs like Wise, for instance, we've been trying to solve some major pain points that exist in the sort of remittance, international remittances, which we believe and we know is important for many people. For instance, people or workers sending money back home to support their family, for education purposes or for their daily lives. So sending money, across the border or across the world has been traditionally very expensive. As we know it, it's also slow and also non-transparent. Say if you were to send money from, between country A and country B, what typically will happen traditionally is you will need to walk up to a physical branch, fill up a bunch of paperwork, and money actually takes a few days to actually arrive in the other side of the world. So fintechs like Wise, for example, has simplified cross-border payments. Rather than relying on SWIFT, we have instead built banking networks across the world linked together by a proprietary technology. So as much as possible, money doesn't actually move across the borders, and this allows us to bypass middlemen. So what we've seen as an impact is we're able to lower cost, speed, and improve convenience. So today, 38% of the transfers are instant, and what we mean by instant is that it's under 20 seconds. In addition, the cost of using us today is on average 0.67%, which is a significant achievement, not just for us, but for many people around the world. And we know this is in line with the UN Sustainable Development Goal to lower the cost of remittances to less than 3%, by 2030. So just to give a comparison, the global average today, the cost of sending money is actually 6.4%. So as you can see, there's still, a huge gap. And I still think that, there's a lot of a role that, fintechs and technology can play in order to, make cross-border payments better.
Great. Thank you. Gustav, can we go to you next?
Yes, of course. So yeah, I mean, when I'm talking about crypto and blockchain, I'm talking purely from like a public blockchain point of view. And I really believe that like what we're seeing in the public blockchain space right now, such as blockchains such as like Ethereum, Solana, Polygon, and so on, is really that we have innovated on the infrastructural level of financial services for one of the first times ever, and are able to settle transactions globally in a way that we haven't really seen before, right? So I mean, things such as and by doing so, we are enabling kind of like a very new way of permissionless financial services, where everyone can join from all over the world. You can send value from point A to point B very, very fast at depending on the blockchain you use, at a very cheap cost as well. And on top of that, like you never really have to leave the blockchain itself, because all the other financial services which you want, and a lot of the other things, we've also seen gaming, for example, on the blockchain become really, really big, with Axie Infinity especially hitting it big with millions of users in the Philippines, and being like a really big thing that helped a lot of people get through kind of like the job situation during COVID. But the thing that is so beautiful here is that like once we have the innovation on the infrastructural level, actually means that once you're onboarded into this blockchain system, this crypto system, you never really need to leave to get a lot of the things that you want to achieve as like a retail user, right? Both in regards to financial services, earning an interest, sending money to your friends, to your parents, taking a loan, trading, all of these things becomes democratized due to the pure openness of these public networks. So I think that one thing that we really have seen here is, first off, like the innovation on the infrastructural level, and then another thing is that since like a blockchain itself uses the same technology across the board. So for example, Ethereum is Solidity, you have Solana that is written in Rust. Every single project and protocol on this blockchain, they use the same programming language. And on top of that, they're also completely open source, and people can pick up and use them as they please on a complete open source licenses for the most part. So on top of having this like innovation on the infrastructure level, we also have this very, very strong compounding effect, because a lot of the projects that we see today, they basically take bits and pieces of other protocols and then they create a new product on top of it. So traditionally, in fintech, if you had a fintech company who was looking to solve a problem, you had to build everything from scratch, which is of course like a very long process. It's very expensive. Setting up everything you need in regards to infrastructure and relationships takes a very long time. And then after that, you need to start onboarding users. With the blockchain itself, you kind of like already have like a pretty strong user base who's familiar with using the access products to your protocol, which is the wallet infrastructure on that specific blockchain. And on top of that, let's say you want to build a protocol that I know now that Ekepark, you mentioned both NFTs were being very expensive. For example, there's this project called Fractional Art, where I think the concepts that what they do, I think you would be very familiar with, because they fractionalize expensive NFTs. And they're doing that by using the technology that the NFTs have, and then they create their own fractionalized system on top of it, which then gives people access to purchase very expensive NFTs if that's what they want. Or like Apple shares, for example, if you tokenize Apple shares, there's another product called Swarm Markets, where they basically created these trading pools where people can put in traditional assets, and then all of a sudden, you can allow people to trade against the tokenized versions of the shares you're having. So all of a sudden, you actually hold a traditional asset in a tokenized form, and because you can use it in their pools, you're actually earning trading fees on top of just holding the asset. So I think, going forward, we will see a lot of these, new type of innovations where you take bits and pieces from around the ecosystem or different types of assets, and you package them in a new form, and you can use them in some of these, new protocols. And I think this is really democratizing access for people to participate in things such as, being a market maker, which is something that most people who has a little bit of crypto understanding today know how easy it is to be a market maker in crypto, where in traditional finance that was simply impossible, because like the technical overhead of setting up a market making company was just insane. So I believe that like what we really see here is like the democratization of a lot of things that historically just wasn't accessible to people, and creating new types of products using assets in a new way is also something I think we're seeing a lot.
So let me ask a question. A lot of you have talked about distributed ledger technology as being a democratizer and as a levelizer. In fact, you talked about your business is fractional ownership. It's making things small enough to digest for those presumably with not as much financial means as others. But I wonder if people really understand anything that you're talking about. I mean, does the average person in Asia Pacific have any idea? Could they make head or sense of anything that's been said yet in today's conversation? But a really practical question out there. We're talking about helping people. Do we understand them? Do they understand us? Or are the solutions we're providing real solutions to their problems? What do we need to do in terms of, what do we need to do in terms of education and understanding so that these innovations actually can have practical impact on people's lives? Yeah. I'm curious if anybody wants to take the first crack at that. Sort of open floor. Yeah, please.
Yeah, can I? Because I think it's a good follow up to Gustav actually before. When we talk about democratization, right? It's not just making it, or to us at least, it's not just making it small enough pieces, right? Yeah, that's just one part of it, right? And having products. I think Gustav talking about tokenization of Apple shares and pooling it around, and basically structured products, right? Now, structured products, it's hard for me to understand. Okay, it's hard for me to understand. I've spent 20 years as head of investment banking. Now, my mom wouldn't understand it. Not the average person would understand it. And I think there's always going to be a place for this type of products. But this is like what do you call it? Graduate degrees, sort of high level investments. But there are 98% of other people who will not understand that. So I think for us, right, to make it impactful, I think to Mr. Ahmed's comment, right, not only making it small into small enough pieces, and we do fractional ownership of NFT. That's how we linked real world assets to the digital assets before we fractionalizing it. It's also making sure that the product or the asset that listed on it, right, is simple enough. So there won't be any structuring, any structured products. It'll be simple as if you own a fraction of your own part of it, you own part of that single house, right? You own part of that art piece. It's that simple to understand. And also the most important part of it is making sure that the actual environment, the whole ecosystem, has got standardization of understanding. Okay, so it's not walking to making investments in fractional ownership of this NFT and having to actually read the white paper for this one, and then going to the next one, having to read the white paper for the next one, going to the next one, actually having to understand the next one, right? The whole thing needs to be standardized. It's a bit like walking to the stock market, right? And you want to invest in bank stock today. Okay, and if I told you that Bank A was based on Thai law, Bank B was based on UK law, Bank C it's actually not equity at all, but some sort of share of earnings, and go and read the white paper for it. Now that makes it impossible. That's actually the standardization of a rule of law. But then the next one is even more important, which is the standardization of the common understanding. Today, you're going and buy a share. It's second nature to you that you know that you own part of that company. If you own part of that company, you get part of the dividend. If they pay dividend, you get to vote, that sort of stuff. Now, people say, oh, that's actually common knowledge. That's really easy to understand. Well, actually, that's the most important thing. So you need to create this common understanding before you actually link the technology to the common people, right? It's a bit like building a road. This is how I usually explain it. You can build the road, governments can build the road, right? And we're trying to build the road, right? But you don't tell people, go drive. You have to tell people, you drive on the left-hand side. You see red light, you got to stop. You see green light, you can go. And this is where you need to link the technology to the mass scalability by actually providing the standardization of easy enough understanding and common rule of law.
Right. Anybody else want to? Carl,
I'll go. I mean, I think that we're talking about technology as an enabler and, for inclusion and all that. But we should, if blockchain or DLT is going to be successful, people shouldn't have to know about it at all, right? People send emails nowadays and they don't know TCP/IP protocols, right? It's a base layer that other products and other services are built upon. And I think, sure, there's maybe some education to understand that this is a technology that needs to be used. And again, it doesn't solve everything, it solves certain problems, but it's behooves us. I mean, it's our responsibility as software developers or selling to the market that we have to make this easy for people to understand and use, right? They don't need to understand the technology. Right? There's no reason to. They should understand, this is the product I want, this is the service I want, this is easier, this is cheaper, this is faster. But it's really not about the technology. It's about the service. And I think, the education is good to know for the regulators, maybe to know that this is safe. This has KYC, AML, all the other, money laundering, all that other issues are being taken care of. But for the common user, whether it's an SME or an individual, I just want to use it, right? I don't need to understand that. So I think, it's our responsibility to make this technology easy and it's a service they want, really not the technology.
Yeah, it's a great point. And I want to come to some of these governance issues in a moment, but does anybody else want to jump in on this education topic? Yeah, please.
Yeah, maybe I'll jump in because well, I have two teenagers, and a lot of times for cryptocurrencies, you will find that majority of the users are in their 20s. Maybe about 60 to 70% of their users are in the 20s, and I may be a conservative mother, but then I ask the young generation to really understand what they are investing before they invest, not just from a layman perspective, but also understand the technology. From a technology standpoint, it must be the ability to validate. Someone must be able to validate the technology, maybe not the general user on the road, but in the blockchain association, we're growing so fast that we face the challenge of certifying and validation. The good actors versus the bad ones, right? And if even a blockchain association that had many experts, we need a panel of experts to come in and decide how can we validate this for the general public. So I would, to Carl's point, feel that maybe the general public cannot validate the technology, but the regulators, the association, someone must be able to do that. Otherwise, we have the younger generation investing in something they cannot explain or something they do not know. From a technology standpoint, I'm also very clear that something that's immutable, something that's totally encrypted, secured, is only so in a certain environment. And there are many ways that it is not so, right? So I think the general misperception that it is 100% secure, not hackable, is a big assumption, right? So you get hacked. All technologies get hacked along the way until you come to a mature stability phase.
Thank you. Anyone else? No, yeah, I would
just
Gustav,
a quick comment. I mean, I think there's like a very big difference between investing in cryptocurrencies and then using different protocols that comes out of it, right? I think just as like a general note, people should always try to understand what they invest in. But I think very much to what Carl also said, especially with DeFi, like, yes, like the protocols are pretty complex, right? I wouldn't expect everyone to understand what happens inside every single protocol if they're just looking to earn an interest rate on their money, or like if they're using DAI, our stablecoin, to send money from A to B. But the good thing with these projects, right, is that they're completely open source. So you have this like community validation. So I mean, of course, like you guys also mentioned regulators a lot, but I mean, come on, like I don't think there's a lot of regulators right now who understands the fringe of these technologies yet, right? It might happen at some point, but it's still definitely like a pretty tough area, and it's also a very young industry. But DeFi, like the kind of like the confidence you can have is that since everything is open source, that first off, to go through like rigorous auditing processes, and then on top of that, you also have kind of like the whole community and a lot of smart people looking at the code, which of course doesn't guarantee anything, but it probably is in many cases, the chance of you understanding everything that is happening compared to, someone who actually, audits code for a living, you can often use them as like a reference point. So I don't have like an expectation that everyone understands it. But yeah, like as long as it's solving a problem or giving, a product that people want to use, and you can use these open source methodologies to have confidence in what is happening, then I think that is like pretty good.
Yeah, I think, Gustav, I'd have to say, just to jump in, that I really agree with sort of the comment that you've made, and picking up on Carl's point. Investing in a technology is very different from using it. If I had to understand every technology I use, well, we wouldn't be having this conversation to begin with, but or many others. I saw a really interesting statement once that there isn't a single human being on Earth who possesses the knowledge required, to manufacture a pencil. Everything from the wood to the graphite to paint to the metal to the rubber. Not one human being has all of that knowledge. And the point is to create products that solve practical problems that people can use. And that then obviously carries its own momentum. But then that, I think, is a natural segue to the governance question, right? Because it is the responsibility of our public institutions to ensure that those products do not carry within them embedded risks, that over time are going to swamp the benefits. And one of the real challenges, I think, in ecosystems like this, I think this falls squarely into the category of things that we refer to as high quality problems. But one of the challenges is that, of course, the regulators aren't up to speed on the cutting edge of innovation. There's no way they could possibly be. They've got to focus on things that have scaled and that represent systemic risks. And they've got to take time to digest. And they've got to both create an ecosystem that allows space for experimentation, but one that sometimes, and entrepreneurs aren't always happy with this process, but sometimes winnows things out that may seem very attractive, that have embedded within them systemic risk. And I think one of the really interesting things about DeFi and about sort of the whole ecosystem, from DeFi all the way to distributed ledger technology and blockchain, and then specific cryptocurrencies, is sometimes it's a political statement as much as a technology statement, right? I mean, a lot of these things that are happening, they can be formulated in a certain context as a statement about technology, right? But they can be formulated in another context as really a raw political statement about trust in government, about self-reliance. And it's always struck me that one of the drivers of this entire ecosystem is a breakdown of trust in traditional political institutions, and that can't be discounted as an element of what's happening here. And I think that all of that backdrop then means that so that backdrop of rapid change, that backdrop of disruptive, not just technology disruptive, but politically disruptive ambition embedded within DeFi as an ecosystem, that makes this a really hard. This is a really hard place for. And then, of course, Tanbin, I'm looking at you because you're associated with one of the largest financial institutions in the world. And then you're coming at the heart of the global financial system, which we know is embedded with all kinds of risks, right? And that have to be managed by regulators. So, I'd be very curious. What is your advice as innovators, all of you? What is your advice for regulators who are looking at the same things that you're looking at, and you're looking at them and thinking opportunity, and they are looking at them and thinking risk? And we want you to be thinking opportunity, and we want them to be thinking risk. But what should they be hearing from you about how they should be doing their jobs? Anybody want to jump in on this?
Hi, I'll jump in on it if you don't mind. Yeah.
Please.
So I'm not going to be just speaking, specifically on like DeFi or blockchain, but I also think, this is probably relatable, to some of the people or the players here, in the market today. But I think, there should be at least some standardization and consistency in terms of the regimes, across the region or broadly, right? Because, one of the challenges that we observe, particularly in this region, is rather a disparate and a complex regime. So to just give some context, in Europe, typically, players probably only need one license, to switch on, the services in, each of the countries in Europe. But in APAC specifically, not sure about DeFi or blockchain, but certainly for payments company like us, we'll often need a number of licenses just to operate in a single market. And often we find that the regimes are relatively different from one another. So it makes things a lot sort of like a bit more difficult for us to sort of like provide our services to the customers, right? So I definitely think that it is very important to at least have a standardized approach to support innovation in the space. I think secondly, I think a regime that sort of gives fintechs a space to grow and compete on the same level playing field as incumbents is also very important. I think it brings out a bit more competition in the market, and ultimately, creating and providing value and benefits to the consumers and economy. So a good example that I can share is, Singapore allowing non-banks to participate in the direct fast system, which is an instant payment system. We've also seen similar conversations happening, in this region, such as Australia, Malaysia, and Hong Kong as well. So what we've seen is that, the ability to join this sort of platform allows us to, own the entire payments experience from start to finish, and thereby enabling us to eliminate the middleman completely in the entire process. So that's why we, advocate for a level playing field in the market, and we really hope to see a lot more such initiatives in other countries.
Thank you, Peck Hua. Ikpak, were you gonna jump in?
Sure. Ahmed, I actually, I agree with you that you want the regulator to be thinking about risk, and you want the innovators to be thinking about innovation. So there needs to be, some sort of meeting in the middle somewhere, because frankly, I do believe in regulation, because the level of knowledge, and actually I didn't actually mean understanding the technology. I don't actually understand technologies myself. I'm a banker. I'm like the biggest dinosaur class in the world, actually. I meant actually understanding the product, meaning that the actual what they're investing in. So the complexity of the products rather than technology is what I meant. When most people have different levels of understandings, that's when regulation needs to come in, because otherwise, they fall prey of things. But then I do understand that the speed in which the innovators wants to move, it's mismatched with the speed at which the regulators can move. And that's why you get the the Uber approach of just do it first and ask for forgiveness later type stuff. And you can't really have that really. And I think humans resist change. I think from our own experience in terms of introducing new products and the like, suddenly people will concentrate on the risk that they see or what can go wrong, and often actually forgetting that actually that risk or that what can go wrong there is actually happening right now in the current world. It's already there. Like, we're not actually introducing any additional risk, but just because it's a new product, that risk has become pronounced now, or as in like they think that it's pronounced, but it's actually the same. So long story short, I think the only way to really trying to the two to meet together is a sandbox system where just let us try, ring fence it, make sure that the issues are not massively going to take down the country or something like that. But let us try and actually participate in the sandbox. Have the regulators participate in the sandbox, and that's actually what we trying to encourage regulators from around the world to actually do with us, right? Start small and participate with us. You can see already giving or approving or allowing.
Okay, thank you. I don't know if others had the same problem. I had just a little bit of breakup towards the end of that, but I think that point about sandboxes and creating, creating safe space for engagement, that's a really important point. Anybody else? Yeah, Carl, you want to jump in?
Yeah, I mean, two things is, standards are a great idea. If we wait for standards to be established throughout the whole world, then we'll never get anything done, right? I mean, right now we're on Zoom, right? If we had waited, there's Zoom, there's Teams, there's Skype, there's BlueJeans, there's all these different systems. There's a couple different in China, right? If we waited for one standard for global video conferencing to come up and everyone spent all their time to integrate, no one would have talked to each other for the last 20 months, right? So standards are definitely something we need to work to, but it shouldn't stop us from starting, right? It shouldn't stop us from building. I think regulators need to think about how to connect, obviously, and I think they are learning, and it takes time. And I think you're right; they focus on the bigger systemic risk first, and then smaller stuff. But I think the one way to look at of building is try to build something new, built within the standards, right? So for instance, at Contour, we've used technology to make trade finance easier for everyone, but we're using the same legal standards, right? There's a couple of things. There's legal, there's regulatory, there's a lot of different standards. And so we built a product based on the same legal standards been around for 400 years, right? And, UCP and EUCP. So it's the same legal framework, but using technology to make it, instead of taking 10 days, it takes an afternoon, right? To make it much quicker. So that's also a way, I think, for some, startups, don't go all the way and completely create something completely new, because you're going to be fighting the regulators, right? And it might be good for a smaller group, but if you really want to go global, you really want to do something and be more accepted by the masses and supported by governments and regulators, where's that in-between spot, that sweet spot, that you can take some of the regulation, some of the, the standards, and build something new. Because you go way far out, it's great, it's exciting for a small amount of people, right? But if you want to be successful, or again, maybe you want to be on the outer edge, right? That's great. But you're going to be challenged by regulators and governments.
Okay, anybody else want to jump in?
Maybe I'll add something. I think it's very tricky for the regulator with regards to when to govern, right? And the Singapore government, I think, is doing a very good job in terms of allowing innovations to grow. So don't kill it before it starts to grow. Allow the FinTech Association, the Blockchain Association to grow. And things to be experimented, to be sandboxed or not. But having said that, we have our share of grievances as well with regards to many sandboxes that we went in and cannot come out, right? And then you get new technologies that became old after 2 years. You're finally out of the sandbox, and guess what? You go like, I'm not that interested. It's no longer that new to implement. So I think regulators are learning. But where the Singapore government is doing right, I think, is not only the timing to govern, but also the control of many fundamental systems. So it may sound kind of, sometimes I feel bad for entrepreneurs, because ultimately they want to have control in such a way that if they do allow you to open up, they must have a way to shut you down. The same thing, like you build a robot that's purely AI, you would have a final code that says that the human can still override the robot in the end. So I would think the Singapore government is building a lot of that. A lot of central bank digital currency are also considering that, and like all technology, is not an unfair statement, but like all technology, it comes with in a controlled manner first, then open up into a less controlled manner. And that applies to big ones and small ones. When we first started with facial recognition, where everybody is debating about facial recognition, you either stop it and say that it's banned totally, so you don't use it at all, or we have countries that started with just having a human validate the solution. So it can be fully automated, but you have a human to validate it initially. And then you only stop doing that when the accuracy level is satisfactory. So a lot of such other technologies like OCR, or for us, we have one solution called micro expression analysis. It analyzes your emotion to see whether you are lying, and that went through a lot of scrutiny, because they goes like, the solution has been used in China, so you can tell whether a Chinese is lying, but how can you tell whether a Filipino is lying, or an Indonesian or a Thai is lying or not? What about the bias and stuff like that? So we had to tweak the solution many ways. So instead of a score, initially the solution gives a score and says that Ahmad is 70% lying, kind of risk score. If we change that, we said that, okay, it can't conclude that score. So it now gives a red flag, and it allows the human to go in there and ask additional questions, make some judgment. So I think as long as we're not shut down, we're allowed to experiment. We adjust, we're allowed to adjust and experiment. I think that brings good technology to finally land an impact. So that's where regulators can help us out by having that room for adjustment.
Yeah, well, I think the example you just gave is a great example of how AI and big data and technology is fundamentally disrupting millennial and even older patterns of human interaction, and I think leaving space for contravention is fine, but the enormous disruption and change to systems of understanding fellow humanity that have persisted, probably since the origin of this species, at least, right? I mean, it's hard to overstate, how important, how significant some of these technologies are in terms of how they change, how human beings deal with each other. I wanted to pivot to something slightly related but different. One of the things that struck me as I was listening to this group, is that we've got some like startups in the original, just building on this question of governance. We've got some startups here that are sort of in the original mold, right? Bootstrap, garage, fund yourself. But we've got a couple of other interesting types of startups here. I think, Carl, in your case, with Contour, you're trying to co-opt the big actors. And that's sort of a different approach, right, to doing a startup. And Kanbin, in your case, you've got a large, globally, relevant institution, which is saying, hey, I need to carve out a more innovative business. And it just struck me as I was listening to everybody that these are it's probably worth spending a minute just asking, the two of you, what have you learned? Because you've both been in other sorts of contexts and in other firms. In addition to the idea of sandboxes as meeting places, and the idea, that Peik Wen was talking about level playing field, there are these other market-based innovations that are kind of marry large and small and innovator and traditional industry. Just curious what you think we've learned in those processes about disruption and innovation and how to do things and to scale them. Anybody free to jump in, probably, yeah.
Yeah, I'll start. I mean, yeah, you're exactly right. So we started as a project. 8 banks got together, global banks, some of the biggest in the world, HSBC, Standard Chartered, ING, BNP, RBS, and some smaller banks, Bangkok Bank, CDBC in Taiwan, SCB in Sweden. They all got together and said, let's do a project to see if technology will help letters of credit work better. And what really struck me when I came to evaluate it was that they realized very maturely, maybe that's not the right word, but very, in the new world, that collaboration was going to be the way to success. They weren't thinking of using this system to beat the other banks. They realized that the benefit was adding as many banks to this ecosystem as possible, right? So we're now at 15 banks, maybe 16 by the end of this week. And a lot of the banks, the new banks, have been introduced by the original investors. So those 8 banks became investors. And so it's interesting to see banks, which are traditionally, very narrow focused, we're all competitors, realize, in this new world that collaboration is going to be the way to be successful. Now, having a consortium is very difficult, right? You have, spend most of my time herding the cats, right? Everyone has an opinion. Everyone wants to, wants things to go their way. So they can think they want to collaborate, but then, of course, there's individuals and then a much bigger bank. But I mean, this collaboration as a future way of building networks, building products, I think is something that's fairly new over the last couple of years. And it's come because of sort of blockchain distributed ledger. Blockchain's a team sport. You can't do it by yourself, right? So how do we work together? So it's an interesting way. It's a challenge, but I think it's a new way of building systems and products.
So Tanbin, I want to come to you in a second, but I'm going to ask a bit of I'm going to push the envelope a little bit on this. So you're saying we're collaborating with our competitors, but you're defining your competitors in a very old-fashioned way. You're saying our competitors are the established players in our current industry. But what we've seen in ecosystem after ecosystem, actually the competitor wasn't inside your club, it was outside your club, right? It was somebody who came out from left field. So Blockbuster got disrupted by Netflix. They never would have listed Netflix as a competitor. The things you're doing are clearly good for the large institutions. They need to do them. They've got to transition into these technologies. They need standards. But I want to ask the people on this panel from startups, are these sorts of efforts on the part of large institutions to create standards, which are well-meaning, and I do not question whether they're well-meaning, but are they actually negative for the innovation process? because, and we're sort of seeing antitrust law get redefined. I don't want to delve into what is and isn't an antitrust violation, but the idea that perhaps there's an implicit exercise of market power here that favors incumbents over disruptors. Curious if anybody wants to jump in on that.
It's hard to say on this panel, I think.
It's easy to ask.
It's hard to, but there's definitely I think look, with our eyes wide open, I think that happens all around the region, all around the world. Obviously incumbents want to protect their turf. I think that's just only natural, and they have much bigger pool of capital. They have obviously been there and done that and everything, so it does create a hurdle. I don't think we can run away from that. I don't think we can run away from that. So for me, obviously open competition is always going to benefit the consumer the most. But even with allowing open competition, sometimes it's not a fair competition, as I think Ahmed, you were suggesting, which I'm
not suggesting anything. I'm just asking questions.
As I said, it's very hard to say that, but look, I think everyone here, I think, understand that that's sometimes it's the case, and definitely in the markets that I operate in, it's hard to go up against the big banks for sure.
Mm-hmm. Yeah, I mean, I think like we've seen like a pretty interesting development on that front in like the crypto space. So like some years ago, I think already back in 2017, you had some of the very big traditional tech companies coming in. I had IBM that had Hyperledger, right, and you had R3 as well. And I think like, I mean, today this is like, I don't know about R3, but IBM's Hyperledger is like nearly non-existent, right? Like they rounded up all of these big companies and did all of these projects that had a lot of press, and I read this article that basically they ended up laying off the entire team because there was like no one really wanting to use whatever came out of this, and they had like a lot of pilots going on and so on, but like there was like no usage, right? And then you had like right next to it, you had like the public blockchain space, which just blossomed, right? Where innovation really took off. So I think it also depends on like a lot on the industry, and I've also seen some statistics and read some articles about how you see now that especially in Europe, you have a lot of these like neobanks, which is like eating away market share from the traditional banks, right? So I don't really see the traditional banks being very good gatekeepers, or big traditional companies being very good gatekeepers at this point. I think also like another thing which we're witnessing a lot is that once you had these like very big names under the belt, and you have all these eyes against you, that also hinders them a lot. So for example, Facebook's stablecoin project, I think they rebranded now, but was before called Libra. Like they came out swinging, and then they just got completely shut down, and I think they're still working on it, but there's like nothing really out about it anymore. And like 2 years later, they have not launched and doesn't have any users. So I think like what I think helped DeFi a lot was that it could kind of like fly under the radar, and didn't really get held up to the standards that someone like Facebook did. And by flying under the radar, like I'm not meaning that you're like avoiding regulation, but for like any successful DeFi protocol, the goal was always to be completely decentralized and not to have a centralized point of failure. And of course, like once you reach that level, it becomes infinitely more difficult to regulate as well, because there's not a company you can call, there's no one you can hinder in building, there's no one you can implement restrictions in your product. So like at least in like the crypto and blockchain space, the public blockchain space, it doesn't really seem like there's been like a lot of success on that front. And we're seeing like a very interesting trend as well. So we had, at Maker, we basically allow people to lock up collateral in our system and take a loan of DAI, our stablecoin, against the collateral that they're using. to be added as collateral, you need to go through like a process, and we have real world assets as well that we give loans against, and we actually saw SocGen, Societe Generale, come in with an application a couple of weeks ago, where they basically wants to use our system to finance a bond offering that they're having. So I think also now we're seeing it's still a very young industry, so that's why there's not more of these big things going on right now. But I think like moving forward, we will definitely see more and more of these like companies coming in, traditional businesses coming in, and you're wanting to gain the benefits, and also in these permissionless systems. So I don't think that at least in our part of the space that we feel that there's any hindrance coming from traditional companies. But we see them joining more and more, and I think this is like a trend that will only continue.
Yeah, then I'll probably detour that. I mean, OneConnect serve more conventional banks than greenfield banks, simply because there are not that many greenfield banks, but the same tech stack, right? So we built the entire tech stack, and the same tech stack, front end to back end, the entire tech stack for a conventional bank takes 3 times the effort compared to a greenfield bank. So and many times we don't actually earn a profit doing that for a conventional bank, because on top of the 3 times extra to deploy, you spend easily another year trying to herd the cats. What Carl said, herd the cats with regards to stakeholders alignment within the bank. So they face a lot of challenges trying to digitize. They might have an edge over existing customers and stuff, or with regulators, but then I see the challenges is far way higher than the edges they have. Yeah.
Thanks. And Tan Binh, I know I had asked you a question and then we went off in a different direction, but did you want to also talk about kind of your own experience, bridging that gap between large institution and innovation ecosystem, taking a different approach from that Contour took, which is a partnership model?
I think Asia is in generally doing a great job in terms of the collaboration between fintechs and banks compared to other regions. I would say I've participated in global sessions whereby you really feel the competition between fintechs taking away the banks, bread and butter, and the banks really feeling that the fintechs are not orthodox players, etc. But in Southeast Asia, there is our need for financial inclusion, as well as our lack of technology available to Southeast Asia emerging countries, I think has exposed a lot of opportunities to work together. So I do see Asia kind of ahead globally compared to globally in terms of this collaboration. And in OneConnect, we kind of embrace this very hard, feeling that this is the area of growth. So we had the full ability to apply for any digital banking license in Southeast Asia, but we chose not to, because Southeast Asia, the countries are small. So we decided very consciously that Ping An Group will do a traditional financing business in Greater Bay, China, and then outside of China, we will only do tech business, simply because I feel then that makes our value proposition clear, and then allows, and we see a lot of banks, despite the fact that initially they will ask, will Ping An Bank kind of one day come to Thailand or come to Indonesia or come to Philippines? And then we had to assure them over time that we have no plans to do so. What we want to do is just port technology out of China. And I think that builds a lot of collaboration opportunities going forward.
Okay, great. Anybody else want to jump in here? Okay, I'm going to ask a quick question that came in from the audience. We're grateful to those who've joined us today. Because of the pandemic, many developing countries with low digital infrastructure had to hasten digitization in the past year and a half. Are there any changes on how your companies and your products or services have shifted their initial objectives and goals to cope with the way societies are using technology post-pandemic? So has COVID-19 caused a shift in your strategies? Binru, do you want to take the first crack at that?
Yeah, definitely. I think the pandemic, a lot of people feel that tech companies, you are not affected by the pandemic. Your business is booming and growing, compared to the retail. Of course, we're not as hit as hard, but we do face as funny as it sounds, really remote working, not being able to send talents to the countries, so the technology can be implemented remotely on the cloud. But you realize that if I work with conventional banks, larger institutions, not seeing the customer, not seeing that I'm not able to do a workshop, doing an entire core banking migration fully on cloud without seeing the customer is our first time during COVID. We started our first, the core banking migration kind of in the midst of COVID and completing it. I would say out of my 30 years of working experience, I've not seen a core banking migration that's fully done on cloud without seeing the customer. To us, that itself is record breaking. And what have we changed? We have changed to really in-country talents, hiring in-country talents a little bit more, making sure that there are previously, due to different talents, maturity and availability in the countries, you will have like the data scientist, the lead developer here, and then we have the super expertise in China that will fly over when we need to. Now this model just totally don't work. Yeah, nobody's willing to fly to emerging Southeast Asia countries, so we had to really train remotely. So a lot of stepping up on training, hiring of local talents to do localization work in the country in order to deploy successfully. So that's I think one of the key largest challenge during the pandemic.
Okay, excellent. Anybody else want to jump in on that?
I mean, our company was born right during COVID, right? So we started, basically January 2020, right as things started up. So I completely agree that, this remote, even in being in the same country, all our staff are in Singapore, right? We've only had one chance to get all the staff together. How do you build a culture of a company when not everyone can come to the office, right? Everyone's working from home, and especially a new company, right? So I think that's going to be a challenge for anyone building something or adding new divisions, in these COVID times. But yeah, and calling on customers, right? Completely agree. I'm actually traveling to Europe later this week for the first in-person meetings, since this company's, we're going to a conference, the first time, our company's ever gone to a conference, right? Besides on Zoom. So yeah, it's definitely a new world in terms of selling, and again, talking to whether new companies or established players. It's created some challenges, but I think also same point, and maybe Binru, the same ideas. People are willing to make decisions based on Zoom calls. Before, to go in an emerging country, I know a bank wouldn't have bought our system without at least 5 visits where you go to see them. You have lunch, you get to meet them. Now people realize that you can't do it. And you have to make decisions based on other factors. So I think it's taught everyone that to be a lot more efficient.
Yeah, absolutely. Anybody else want to jump in?
Yeah, sure. Just very briefly, it's actually, I think as someone said earlier on this call, that COVID has really accelerated things. We actually haven't wavered from what we wanted to build, and actually we knew that the world wasn't quite ready for it just yet. It's a little bit like I think in Australia 15 years ago we built the national broadband network, where built fiber optics all around the place, but then the last mile to the house was still copper. They didn't wait for it, right? And I think this is where I want to leave things here, where I think innovation and development, I don't think we need to wait for everyone to be ready. I think we go ahead and whilst our technology or our product would be so much more efficient, so much more better if the last mile was already fiber optics, but we don't need to wait for that. We'll just build the network and wait for that to become available or change. And actually, COVID has actually accelerated that, or accelerating. So that's we haven't wavered.
Great. Anybody else? Good. Well, look, this has been a really interesting conversation, and actually, there's one last question that just came in. I'm going to actually just quickly address that. Should development institutions join the trend to also invest in innovation and technologies? Will this be reinventing the wheel? Should they just apply and deploy technologies innovation invented by tech industry or other specialists? I think that's a great question. You know, ADB President Masa we launched ADB Ventures a couple of years ago at ADB. I think it was the first item approved by our new president at the time, President Masa Asakawa. And he just announced the intention to scale ADB Ventures to $1 billion deployed by 2030. And so, you know, we're certainly growing increasingly active. I think it's important for us to be engaged to ensure that we can add a development lens and perspective to companies as they develop. But I think the second half of the question, should we just be scaling? I'd say certainly that our institutional platforms are designed to drive things to scale. And so we're naturally going to be better at, and probably in the long run have greater impact in scaling scalable solutions, but that doesn't mean we shouldn't be engaged in actually becoming knowledgeable about them and engaged earlier as well. So I think it's a great question. I thought I'd just address. Let me just open the floor. This has been a really, I think we call this disruptive voices, right? So this has been a pretty, as befits a panel with that title, this has been a pretty candid and dynamic and straightforward exchange. So I want to express my thanks to each and every one of you. I want to give the floor to anyone if they want to get a last word in or last comment or observation in before we close out. Anything from any of our panelists? Well, if not, then I think you've certainly done more than justice to the panel. I've certainly enjoyed the conversation a great deal, and we're grateful to each of you and your institutions for being partners to the ADB. Thank you for sharing your perspective and your knowledge with our community at the ADB. I think it's a really important thing that you've done, and hopefully has opened the eyes of those who participate in our institution's life to some of what's happening in the world. Certainly it's opened up my eyes. So with that, let me express again my very sincere thanks to each of you. Thank you, Peik Wan. Thank you, Bin-Ru. Thank you, Ekpak. Thank you, Carl and Gustav, for being with us. And Carolyn, perhaps I can hand the floor back to you.
Thank you so very much, VP Saeed, Ekpak, Bin-Ru, Peik Wan, Gustav, and Carl for such a fascinating, thought-provoking, and truly eye-opening discussion on the importance of fixing pain points that affect many people, about simplicity, inclusiveness, the importance of trust, working within existing standards, and and using the sandbox approach for really creating a safe space to try things out. And when all is said and done, which I really appreciated hearing, it's really all about the services, not the technologies, and about creating products that people can use. So ultimately, it's all about the people. So this was really an exciting panel, and we so thank all of you for sharing your voices and your thoughts today. So the program for the rest of our week promises to deliver more thought-provoking talks on diverse topics. Tomorrow at 10:30 Manila time, we will have a keynote by Vice President for Administration and Corporate Services, Bruce Gosper, on navigating the reset for organizations and a discussion on navigating normal now. So this will be taking an inside-out view on how organizations are coping with the return to safe work. Also coming up this week are discussions on decentralized digital finance. So if your curiosity is up and you want to learn more, you'll be able to delve into that. The launch of ADB's new aid data environment, which is also an exciting point for ADB on the data journey, and the CIO perspective on the future of work and the role of digital tech. So before we wrap up, we ask that each of you please do a quick poll. It'll only take 10 seconds of your time, and we thank you very much in advance. We truly appreciate your feedback on this session. So thanks again, everyone, for attending today, and we hope to see you tomorrow. So don't forget, digital is now.